Hi guys, I'm back for another market update video. A lot of things have happened in the past few days, so I figured it's time to come back and do an update. So I'm posting a few of these bubble charts that have been going around to see if they are valid in my opinion. And if you look at this one, it looks pretty valid, right? We have the super blow off top euphoria, then we have the bull trap of 17, and then now we're going down. So if this is valid, the question is, what is the low? What is the low, right? That's a question. Um, what is the anger or depression zone? Is it at 1,000 or is it at 5,000 or is it at 200? So let's see how this plays out. I mean, people always draw this whenever we have a dip, but this one actually looks semi legit because it's over a broader trend. And yeah, that's that. So this is this, and then someone actually made a one where they overlapped it. They overlapped the BTC chart from one day from Bitstamp on Twitter, and they overlapped it on top of it, and it's almost identical, other than the wicks, of course. So it is interesting, and according to this, we're in anxiety. Why am I getting margin calls? This dip is taking longer than expected. So if we continue going there, we might hit panic, and that might be around. If we look at this chart, I think it's around 2 or 3,000. So let's see what happens. Another chart by a trader on TradingView, kind of the same thing. Uh, we'll have to see what happens, right? So this guy is saying around the 2,000 zone is despair. So we'll see. We're gonna have bounces in between this, obviously. So just an idea, just to keep this in mind for the broader picture. Yeah, just wanted to show this. So this is a chart that I was making more towards the September area, September to November area, when I was trying to figure out what are the price targets and what can we project for the future of Bitcoin price. And so what we did was, this was a pretty well-known channel. So you take the January tops up until November, and then combine it with the bottom from March, and we had this nice channel that we've been respecting actually in Bitcoin up until November 25th when we broke it out. And this actually channel held from January 6th. So I know it's a little bit cluttered and hard to see, but what I'm talking about is this yellow line and this red line. So disregard everything else for now. Just the yellow and the red. This channel here. I'll draw it out for you guys so you can see better. Like this here. Okay, I'm gonna get rid of it now, so you guys know what I'm talking about. This red box here. So this got respected multiple times, and it was a pretty healthy channel. And around here, we stopped respecting it, but we got pretty close. It was in a few percentage zone of the price, so it was still respected in my opinion. And this was a good channel that we were following, and it would have given us a price of it was still really good uptrend, right? Like it was giving us a target of 15,000 for March of this year, and then in June it was telling us 26,000. So it was a good channel. And then I started drawing other trend lines. So this was like the bottom trend line, worst case scenario kind of thing, and this didn't even get hit except for the first dump in March. Then we had this red one, then created another July trend line. So lows from July. So we have this low from July, got hit on September. They got close on November, didn't quite hit. And then I drew, oh, it's actually missing here. So this is a September trend line, this purple line. So let me just add that. September trend line. Get the color right. I think it's that's this one here. Let's save this. So this is September trend line. Got hit once. And then what happened was we broke above this yellow January trend line that we've been following for months in September. So what was that going on was we kept hitting this and get rejected, this top, and it was acting as as a kind of resistance. This line here, you can see tried to pierce it a few times. Once we did pierce it, we entered the parabolic trend, which is what I like to call, which is the blue teal line here. And this parabolic trend was like the crazy phase, right, leading up to the CME and the CBOE futures. So this was when you pretty much couldn't go. I mean, there was no way of predicting what the price was going to be. It hit the psychological 19.9 and then dropped down. So now that when I look at this drop doesn't look too crazy. We're just back in the old channel. That's all that happened. And it is concerning that the September trend line didn't hold. But if we look at it like this, the white lines are resistance points in my opinion. Everyone might have a different opinion for resistance, but in my opinion, it's got to be a solid base that it took a few days to weeks for us to go over. So here, I like this one. Some people don't like this one. I like this one because it retested it. So I think it's a good resistance that became support. Here at 3,000, here at 5,000, and then at 75 to 83, 8,000, sorry, area. Oh, sorry, that's debatable, right? So move that back. And what did I do? There you go. Sorry, I don't want to touch these lines. And that's all that happened. So if we look at where the lines intersect, obviously the July trend line could bounce us here at around that'll be around the 9,000 price range if we continue down. But obviously as the days go by, it's going to be more and more difficult. After a few days, it's going to go up to 95, 96, and it's going to be difficult. I don't consider 10,000 a support because we were only there for, if we zoom in, we're only at 10,000 resistance for 3 days. 3 days, in my opinion, is not enough to be considered support or resistance or anything. It's just a pause, especially in Bitcoin. So if we look at it like this, where do these lines intersect? So ideally, we want to follow this March trend line low that we've been following the whole year up until this explosion and rebound somewhere around this area right here around 74, 78, 7,500 range on February 25th. So that could make sense. We do a little bit of a down to here, come back up, down, up, 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 and then we stop here. That would be great. 7,500 is where a lot of people will be buying the dip. So I would place my bids higher, obviously, place them around 77, 78. Because if it does go down to 75, we'll rebound anyway. You don't need to buy the exact bottom, just gotta get near it. You just want your bids filled, right? You don't want to be the guy that has your bid $100 below the lows. Like, let's say you had your bid at instead of 3,000, you had your bid at 2,900, and you never got filled. You missed all of this. So you want to place your bids a little bit higher. And the only problem with 7,500 not holding is that there's no support. I mean, there's no trend line support anymore. So it just comes down to these resistance levels. And then worst case scenario, there's always a chance we go all the way down here if the bubble chart is correct. The bubble chart, the classic bubble chart, that would mean that the fear/capitulation zone is around here. So it's very possible 3,000 and stuff like that. I mean, it's obviously dependent on news that comes out. So it depends on how the governments and things like that, what kind of press they decide to post about Bitcoin, and that's uncontrollable. So we just have to play the charts and see what we can do. But right now, no longs in play. I'll move on to other charts. This is just like a broad outlook, kind of cool. You can do this on your chart too. Especially this chart is super easy. Connect the January tops and then connect the March bottoms. Get a nice channel here. It's been respecting, and if we just go back into the channel, I'll be happy. No problem, man. So go back into the channel, go up healthy. Still looking at 50,000 Bitcoin by the end of the year. So let's do that. All right, moving on. So this is like a simple 4-hour Fibonacci chart that I've been showing, and this is like the most simple way of looking at how this downtrend's been playing out. So obviously we have this downtrend here that we need to get over, right? And then beyond that, we have this 11,767-ish level that we need to cross. You can obviously play around with this Fibonacci extension. It doesn't need to be at the wick. You can have it here. If you put it here, then this would make sense. If you put it here, it makes more sense for these ones. So it's whatever you like. I mean, it's the same thing. Rejected, rejected. We get a head fake, bull trap, down again. Head fake, didn't quite get there, down again. So these are we're setting higher we're setting lower highs, and it just looks really bad. Look, lower high from the initial bull trap. We have lower high, lower high, lower high, lower high, lower high. We had two lower highs here, and then I had a quick little high. We had a higher high, which was good. This is when a lot of people became bullish again, and the alts had a quick rally. Everyone creamed their pants, and then boom, we have a lower low again, and it doesn't look good. So we need to get over this. We need to get over this. Get over this. Get over this. We have a long way to go to be truly bullish again. I think we need to go above 14,000. Even then, it's still 50-50. That's how I'm looking at it right now for this chart. So this is another chart that I created for the current trend. This is like a moving average chart. So I have a bunch of moving averages out: 10 EMA, 30 EMA, 50 moving average, 200 moving average, and 125 moving average. So if you want to just trade moving averages, just look at when the higher time frame ones are above in sequential order. Usually means it's bearish, right? So right now the 10 EMA is below the 30 EMA, which is below the 50 moving average, below the 125, below 200. So everything is in order. So in order for us to become bullish, we will need to break all these moving averages and have them cross back. So here, when we had the bull trap, all the moving averages cross back. Almost all of them cross back. Not even close though, right? We had the 10 EMA cross, the 30 EMA cross, the 50 EMA, 50 tried, rejected. So I mean, this is pretty bad. We need the moving averages to cross back in order to see an uptrend. The RSI is in neutral territory, but pretty much near the low. Same with the Stoch. It's trying to flip back, but I mean, we could always just consolidate around this zone, pull one of these, just chill here. Doesn't mean we're gonna go up just because it's, you know. So that's the moving averages chart. You could do the same thing on the hourly, and it's all gonna look the same, right? So the hourly, the 125 is just starting to get below 200 again. So the hourly, we need to get above the 50, and then the 125, 200. So it's a long way to go. Same story. Moving on. So this is the daily chart that I drew. This was a very simple downtrend that I saw, in my opinion. This is a descending triangle that broke down. This sets the target at around 5,000, 4750, which coincides with this support and resistance levels. And then this is another smaller triangle a lot of traders have been looking at. It's not my original idea, just a heads up. So it's this triangle here. Descending triangle, confirmed breakdown, targets at 7,800. Nothing crazy to see here. Another thing to mention, I drew this trend line my last video, and I said that if the daily closes below this trend line, we're gonna for sure, almost for certain, go down to at least the 200 moving average, because all these days that we've been consolidating, the daily candles have always managed to close above this point. This was the worst candle, and they're all been kind of doji-ish, like long wick, kind of like neutral candles, slightly bullish, because people are buying these right on the bottom. But this one, no one bought. Dip buyers might be exhausted, and it doesn't look good. We had a lower low from the daily candle, so a lot of people would trigger shorts here, and it just doesn't look good. The 125 MA, which held up the price here and pretty much here as well, pretty close, which has been a historical support zone that I've shown multiple times. The 125 MA here, here. If the chart would load, my RAM's getting a little killed here. Support here, and so on, so on. So this whole year, 125 MA has held. Only one time it's went to 200, which was here in the March one. So right now the daily candle is below it, and we'll see how the day closes. But if we close below this moving average, it's almost a certainty that we're going down to here, which is around 8,700, 9,000 range, and that's concerning. 9,000 we could rebound. People start early dip buying, but it's a little too early. I think if we go here, we might as well just go to the 200 moving average, which coincides with the support zone around 7,700. Let's fib out the triangles to see if our targets are legit. So we'll do one from here to here. Targets at 8,200 and 5,000. Let's not use the thing and use the base of the triangle. Targets at 7,400 and 4,500. Let's use a smaller one for the smaller descending triangle that we drew here. This would be around. This is the base and this is the top. Oops, let me draw it here like that. Okay, so this would be the targets would be here at the moving average. So this is actually a good sign that it matches the moving average, 8,800 or 7,700. And beyond that, I mean, these are kind of, I don't know, 3.0 is pretty intense, but it's possible. That's this chart. Moving on. This is another pattern I saw developing a few days back. I drew it. It's a downward kind of trend, downward channel, you could say. A lot of the daily wicks, the bodies of the candle have been closing inside this trend. And we're doing the same. We're starting to slide out on this daily candle, but you can adjust it. I don't want to adjust it because it looks good so far. And if we go below this channel, then the channel itself starts becoming resistance, which is another headache. So let's see if we can stay in this channel. If we stay in this channel and we do have a rebound, we could look at around, let's see, what's this range here? Let's get a rectangle, rotate a rectangle in there. Rotated rectangles are a little difficult to draw, sorry. So like that. Let's see what's the price range here. So from here to here, from 13,000 to 14,000. Let's move it up a bit though, because it's like, yeah. Well, yeah, I can. If tomorrow we have a miracle candle, it's 14,500, and then February 17th, 13,400. So this will start becoming realistic eventually, and also this matches the same downtrend line, right? So the same thing. But these are the lows. We could just march down here slowly to the 7,300 target. Next, a few triangles we drew. So I talked about this last video. Symmetric triangle that people thought broke up ended up being a huge bull trap, which became a bigger symmetric triangle like this. So if this breakdown is correct, this is a target, 4,000. Smaller smaller symmetric triangle. So this is before I said forming. It's already formed. So from breakdown point is here. So from breakdown point, the target is 5,500. So let's see. At first we thought it was breaking up and we had a 17,000 target. That clearly didn't work out. So the market's tricky right now. It's very hard to trade. Just be careful. I mean, what can I say? It's bearish. Yeah, anyone that says that it's not bearish is just like is just ultra bull. And I'm bullish too on Bitcoin. I believe it's going to be worth at least double by the end of the year, but at the moment it doesn't look good. And prices move so fast, guys. Like look at this drop from here to here. It happened in a week. You know, like this is already over a month of consolidation and drops. So it looks more and more bearish, right? Now we're going back to the favorite indicator, cloud. So let's get rid of some of the moving averages. It's getting messy. Okay, so one day. Let me put these moving averages up because these are useful. So this was what I was talking about regarding the cloud. The price has been below the cloud for way too many days, and we're gonna, if we continue this for a few more, maybe another week or two, we are gonna see a red cloud forming. The cloud is gonna flip to red, which is extremely bearish because we haven't had a red cloud since 2016 October. and that's insane. And like I said, if we zoom out and look at this trend, the price has never been below the cloud. It was below the cloud once here. It's below the cloud once here. Daily close below the cloud once here. This was just a wick, and we closed back in the cloud. So this is extremely bearish. We're consolidating below the cloud. And unless there's some miracle news comes out that, I don't know, let's say US opens Bitcoin ETFs, something like that, or US I don't know, no taxes on Bitcoin trading, something like that, which is not going to happen. That's what's needed to catapult this price. Right now, all technicals are bearish, and it hasn't been like this. And all the FUD, everything that's happened all this time, and the technicals haven't been this bad. I don't think the FUD's at an all-time high. I think the technicals are at an all-time high in terms of how bad it is. All-time low. The technicals are terrible right now, and the FUD's not even that bad. Like these other ones were way worse. Like I don't know. Let's say we go all the way back here. Like ETF denied. Boom. Everyone thought the world was over. PBOC regulating exchanges. Whatever the hell this one was. I don't know. Like I don't know what it was. Like China ban on ban. Probably Bitcoin Unlimited or B Cash fork around July. Like all these, and it's still nothing happened. Like this is so bearish on the cloud, on the daily. It's crazy. And yeah, uh, according to the cloud, we're not bearish until we go above the cloud. So 14,000 is super key. 14,000 and above, and we can start talking about bullishness. But at the moment, we're below the freaking cloud. So that's all I gotta say for today, guys. I'm gonna be launching my own website soon. All the videos will be there for tracking purposes. You can see, you can backtest my strategies. I'm confident you'll enjoy it. And a quick look at the 4-hour cloud. Same trash. Red cloud, price below cloud, bearish TK cross, no trade. Hourly is gonna be a mess, but even the hourly is bearish. Red cloud, price below cloud, bearish TK cross. So if you're looking for a bounce trade or somewhere to reshort, look for this Kijun. So look for a bounce to the Kijun. Look for a bounce to around the 10, 10, 5, 10, 6 area, and then we're gonna we'll go down again according to the cloud and the trend and everything. So then we'll go lower, like something like that. So all right, that's it for today, guys. Good luck trading. I wouldn't be trading. I would just be looking to buy. Just look to buy the dips on your favorite alts, and averaging slowly. Don't go all in. And just a tip: Ethereum looks quite strong right now, so maybe take a look at Ethereum. I'll talk to you guys soon. Have a good day.